Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the market recap for today, 28th of November, Monday, starting the week, and we start with Federal Reserve Williams and Bullard saying a lot of interesting things regarding monetary policy, inflation, and recession. So 2 hours ago, between 2 or 3 hours ago, there were a couple of speeches from Williams and Bullard, and there are some highlights that may be concerning for the upcoming future and the end of the year. So Fed Williams said that how high Fed goes with rates depend on the economy, obviously, but what we already knew, Fed will need to maintain restrictive monetary policy for a while. So we will be at high levels, 5%, most probably for a lot more time than expected, for a while. Fed could lower rates not in 2023, but in 2024. So most probably we will stay high at higher levels, and maybe one cut in 2023 December is what bonds market are pricing in, but Williams focus on 2024. Bullard, if we get rates to sufficiently restrictive stance by the end of this year, and starting the next year, could have conditions for inflation to subside in a reasonable time frame. That's good news. US economy at greater risk of shock that could cause recession. Williams again with the recession fears, and Bullard confirming that recession is not inevitable. Finally, labor market has proved more resilient than expected. A lot of economic data in the past has shown that labor market is quite tight, quite strong, but Williams still says that inflation risks are still to the upside and US economy is at greater risk of shock that could cause a recession. So all these speeches, all these highlights impacted the market in a very bad way. As you can see, we saw they started talking at this time at 12, a lot of volatility, and then during the afternoon, a lot of recession fear, inflation higher expected still, and all these fears regarding recession, and also that Fed will probably cut rates in 2024 instead of 2023. So we will be at higher rates. So as you can see, all the sentiment was to the downside, and we were just selling off based on that information. Fed's still putting a lot of pressure on the markets, saying that recession might be inevitable, and that inflation is still high and will be at higher rates, a lot more than expected. So this is something that happened during the day, and I think it was not priced in. People was quite bullish at the beginning. As you can see in the early open, we were trying to break Friday's close, but we couldn't. So we got lower, we tried to push, but at the end of the day, if we check the daily, we are breaking down again to these levels all these weeks where demand showed up in the last weeks. We are right now at 45 EMA and trying to hold 11,570. So quite an interesting day because of the information that Feds are providing, but disappointing. But I was expecting good moves to the upside, but it is what it is. Markets sometimes surprises to the downside, and you have to adapt and be flexible. So Apple finishing 2.6%. This is the wedge that we were watching during the update at noon. And did it happen? It went lower. Microsoft 2.3% in the red. This is the ABCD pattern that we were watching, and it didn't happen. Tesla and Amazon that were 1.5 plus during this nice rally, and Tesla also had a nice momentum to the upside, finished the day both Well, Tesla flat 0.03%, but Amazon 0.60%. The highest one in comparison with Google minus 1.4%, Nvidia minus 2.7%, and Meta, Facebook minus 2.3%. So bad day for technology, bad day for news regarding recession, inflation, and interest rates. Well, this is the market we are in. So actually, all the sector funds, as you can see, are in the red. Technology leading in the red, energy minus 2.74, and the ones that are barely holding at XLY, thanks to Tesla and Amazon, consumer discretionary finished the day only in the red, 0.62%. And healthcare and staples are also quite more or less trading sideways. Utilities, staples, and healthcare are also in the red, but are less in the red than the positive sector. So we are seeing defensive stances for the money flow that we'll be watching throughout the week, as Wednesday and Thursday bring us a lot more economic information. So the dollar finished the day quite strong. Look at this, following the trend, following the 200 EMA, and I think putting a nice bottoming tail green candle on the daily of previous. This is basically a double bottom and looks more or less decent for a possible move to the upside, a second leg, a second try for this 108 pivot. And yields are also in the red, trading sideways, slightly in the red, 0.27 for 10-year, and the 2-year is 0.50 in the red. So it's quite surprising that we are not seeing yields going higher than expected, but I think the news regarding interest rates were already priced in. We were barely expecting, if we check, this is December next year, we are at 4.67, so 70%. As you can see, we are still in the bonds market seeing a nice high to, this is basically 5%, then a cut at December to 4.6%, and then at the end of the year, finishing at these levels is incredibly high. And in 2024, based on what Feds are saying, maybe we can expect some cut rates. And this is all quite an interesting day for news and to see how market react to those speeches. And tomorrow, I think we don't have nothing interesting regarding the economic calendar. So let's check. Tomorrow we have, Case Shiller is the only thing that maybe might affect the markets 1 hour, half an hour before the market opens, and consumer confidence 30 minutes after the open. Nothing big, nothing important, but still we have to keep seeing, to keep watching these economic releases. And on Wednesday, we have the employment, GDP growth, and job openings for Wednesday. I think a lot of participants will wait for Wednesday, and for sure they will wait for Thursday to personal spending, personal income, and PCE index. So I think we'll have to wait and see how markets digest today's information from the Feds. And let's see if we can at least hold the bare minimum that I was pointing out. These two, this is last week low, the dotted blue line, and hopefully maybe we can see these 2 weeks holding at 11,500 that we've been slowly grinding down after Thanksgiving. So let's see if we can hold these levels until Wednesday and Thursday, and hopefully see good economic data that could push up higher. So we will see. We'll have to wait, to be patient, be disciplined, and react to price action on this economic data. So as always, thank you for your time. If you have any questions, you can comment down below. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time. I hope you had an amazing trading day and see you tomorrow with the market forecast. Remember, discipline and risk management are key for success. Stay safe, everyone.